Good afternoon, my name is Carol Harmer from the International Trading Institute. Now what I'd like to do today is have a look at the Far East markets. I am quite excited about these markets. I used to trade them quite often. So, like any market, it charts well, but in the Nikkei you can have your ups and downs. But we'll just take a look at the weekly chart because there is a good pattern that is prevalent on the chart that I'd like to talk you through. So here you have a weekly chart of the Nikkei. I've put the weekly chart up because always it is important to first determine the trend, and then out of the trend you can see where patterns arise. And although you're not going to be trading, well, I hope you're not going to be trading just off weekly charts, there are patterns that form where if you're not looking at the weekly, monthly charts, you can miss them. So here we have two shoulders and a head. What you're looking at is for this not to go above this level here. So you're picking out pattern. Is it going to happen? Finally it breaks, you have a return to the neckline, you have a return to the right shoulder, and then the market falls away. Note that the weekly close did not close below the 200-week moving average, and obviously that's quite important. And it also held this support here, and that low was 31,156. If we look at the low of April, you can see the low was 37.92. So markets will overshoot. As I told you before, we have to be aware of those little baby algos that are out there just to give us all a hard time. And so once you've seen this, okay, you can then go into your daily chart and get a better view of what's going to happen on the daily. So I'm going to swap you over now so you can see the daily chart. Now when you look at this daily chart in front of you, you can see that this whole area is what we saw on the weekly chart. So this is why it's very important that you look for the patterns or the trends in the longer term charts before you would take a trading decision. You've just always got those levels in the back of your head, because believe me, the people who you're up against trading will be having those same levels in their head. Okay, now we at the International Trading Institute want to make you better traders. That is our aim. We want to take you out of the churn and turn that happens with the retail market every single day, and we would like you to be up to standard of the professional trader. Now obviously you get a master's at the end of our 2-year course. Now that determines what you want to do with it. Do you intend to keep on trading? Do you want to go into the financial sector? And with this certificate you will be able to do any of that because it's a university degree. So that's our aim. But prior us going live, I think it's a good idea to get to know each other and to point out some little things that may help you. Okay, so here we have the daily chart of the Nikkei. I personally wouldn't look at a 4-hourly chart on the Nikkei. I can if you want to in a minute, but let's look at the Nikkei. So you can see that it's bounded off there, okay, where the market was extremely oversold. Momentum was oversold, and what we needed was a correction. So what we can do is I like Fibonacci, as everybody knows now. So we're looking for the last leg down, which is here. So here is where we place our top. If you're going to be reading books, you're going to see that, everybody puts them on differently. But I've always used them from a significant high low. Okay, so you can see now we've retraced back to the 50% at 34,454. So now we need to see where we go from here. This little pattern is quite a bullish pattern. Look to your moving averages as support only. Okay, we're not looking at them as on the turn like most people would have you believe. You're not. You're looking at them as either support or resistance, and which you have both on this chart in front of you. Okay, if you look at your stochastics, you can see that they're overbought, but they're not yet turning. Our RSI is flat, which is the market isn't trending. Okay, now remember that the RSI is a relative strength index. If it's flat, the market's going sideways. If the market is going sideways, your indicators become much more important than if they would if the market was trending. Momentum, it's okay, could stay a little bit more higher, you know, but we have to wait and see if it can break and hold above this area here. If we can, we're looking at 35,336, and then, you know, we look up at this area at 36,592, and that's the 50-day moving average, tying in with the 78.6 fib level, which is very good. Okay, well, I think I've done enough on the Nikkei, but now I'm going to have a look at the Singapore. So if we look at the Singapore stock market, you can see that it's, I mean, it obviously trades, but this area here was the double bottom, and up we went. This is the weekly chart, and as you can see, the market triple topped here. The thing to note is about candlesticks and, well, bar charts really, because all the candlesticks are the whole body of the chart, and it's just a very visual thing. I trained on a bar chart, but if you look at those weeks up here, okay, you can see that the weeks didn't make new highs and sustain them. What the weekly charts did is they went up but traded on the close at the opening price. Again, this is where psychological markets kick in, because if you're trading psychologically and you're at all-time highs and you see something like this where the market trades higher, can't sustain it, but when it does it for 3 weeks on the trot, is a time when you as traders go, do you know what, we could have a market here that is beginning to turn. So there are always little signs that come at you and show you what way the market's going next. It's quite funny, you know, doing it as long as I've been doing it. It never ceases to amaze me. I'm always astounded by what the markets do. I just find them really, really funny. And the more you do it, the more you will be able to trade it by determining what those weekly charts are doing. All charts tell a story. That is all I've ever used. They tell a story, and it's down to your interpretation of that story and how you play out your trading strategy. You know, some people want to be in it short term, some want to be in it, when I'm saying short term, day traders, some want to do 2 or 3 trades a week, some want to do a couple of trades a month. It really doesn't matter what way you want to trade. It matters is that you trade the correct way and the profitable way, okay? And that is what our aim is at the International Trading Institute. Now, all these videos are uploaded to the International Trading Institute YouTube channel. So please go along, like, subscribe, and you will be able to see all the charts that I am doing and putting up on there for you. So, you know, please go on and have a look. I think you'll enjoy it. So let's have a look and see what the Singapore is going to do on a more shorter term basis. Now, what you can see here on the daily charts quite clearly, if I pull that down a bit, the triple top, okay? So there's your key, if you like. They're quite rare, a triple top pattern, but when they arrive, you know, they're pretty good. So you would have had your Fibonacci levels on a bigger scale. So let me just put these on for you so you can see what I mean. So I would take it, if I'm doing it on a weekly basis and I want a longer term view, I'll take it from there and I'll put it up to that height there. Okay, now, spooky. When the market came down, you can see that here we held 33.31, okay, which is the let me show you, it's gone right. It is the 61.8 fib. It just bounced just ahead of the 61.8 Fibonacci level. So these are not levels that just come out of the sky. You pick them and you trade with them. What I've done the retracement level then from here to here. Again, we've hit the 61.8 fib level. So with the RSI, again, using it as a relative strength index, flat, not trending. The momentum, if you look at the momentum chart down here, you can see that it's running out of momentum. Okay, first clue. Look at then your stochastics. Look at it, that it has not been able to break above the 61.8 level. Look again at the 50-day moving average, which is at 384. So you may get some buying up towards that area. However, be very careful because, as I said, momentum indicators are diverging, showing a move down, and so are your stochastics. Watch them over the next couple of days, and we'll take a look at it again in a few days' time. I think that these particular markets are very, very good, and you know, I really hope that you enjoy, because you know, trading is global, so you can't just limit yourself to, we're going to trade Europe, or we're going to trade London, or we're going to trade New York, or whatever. You know, we've got to look at what the Asian markets do as well, and they're heavily traded. So if I can just help out in any way whatsoever with these Asian markets, please, you know, feel free. You can ask me questions. You can get me on my email address. I like very much interaction. We're trying to set up a little chat box on our ITI website so that you should be able to come on once you've enrolled in the course, and we will be able to talk you through it in much greater detail. Anyway, I hope you've enjoyed looking at these Asian markets, and I will see you tomorrow. Okay, good luck everybody.